we have Varun Sabu, Head of Equities at Anand Rathi Shares and Stockbrokers, joining us. Varun, hi, afternoon, and thanks for your time. While of course this MSCI rejig is one event that we're watching out for, the bigger event at play, of course, is the tariffs right now. Help us understand, how are you approaching this entire tariff overhang? Any restructuring that you've done to the portfolio? Any stances you've changed or positions you've reduced?
Hi, thanks, Irina, for inviting us on your show again. So obviously we know about this tariff and this noise going around for a while. I think still this is noise. Obviously, that's my opinion and our house's opinion. Things cannot go through the way they're going through right now. There's too much noise floating around, not only for us, but for all economies in the world, right? Anything which happens, President Trump gets up and calls it that he's going to tariff that country by, say, X number. And these things are keep going on happening. The good part is that our country has handled it very well. India has been handling the entire situation very carefully and very properly. They have not been making unnecessary statements. In fact, if anything, this is leading into much, much better scenarios where most of the other countries where the tariffs are coming, we are again hearing BRICS coming back together, Brazil, Russia, India, China, South Africa, everyone coming together. And, we are hearing about ties to improve there. And that's the most important part, because once this part opens up, you are not reliant, dependent on any one country. As such, also, India from an exports perspective is not much. We are very, very small in the frame. To US also, if everything goes the way it is, the maximum impact in, as per our house's view, is not going to be more than 70, 80 bips or a percent to the GDP. But there is much more that you can capture from other countries. One has to remember we had the UK FTA, which just happened about a month and a half back. That really helps. Things would get diverted there. There are other countries which are looking to do much more ties with us. The entire Europe is willing to open up with us. Our relationship with China is improving. The good part with all this mess is that we are now again getting back stuffs which were stuck like rare earth, etc., which was stuck from the China side. So things are improving. See, there are many, many positive things also which are happening. Most importantly, the biggest positive which is coming out is how the we are hearing about so many things coming out from the government's kitty, right? We heard about this entire GST move, which our respected PM came and spoke about. We are also hearing statements which are coming out that there are going to be many more things that they're going to do from an economic perspective, which is going to help the country. I mean, if you are in a situation where the government is looking so proactive in doing things, and they are clearly making it a statement that okay, we are enough to counter the entire thing from our own consumption, own manufacturing, etc. There's no reason to look back. I think this is the best time. This correction which is happening, led by whatever FII flows, is domestic flows have been super strong and they continue to remain strong. We saw 43,000 crores net mutual fund inflows, which we saw last month, right? I don't see a reason why that will change again this month. So very, very hopeful, very positive on the markets. I think at 18 times 1 year forward or 16 and a half times 2 year forward, our markets are super attractive.
Coming in on the overall market setup right now. By the way, we're about to even breach that 24,700 mark right now. We're clearly at the session lows. 264 points lower is where we're currently at. And now we've already slipped below that mark. Officially, 24,700 got taken in. Right now, Shivangi, let's just revisit your trade on the Nifty. Shivangi, you're on mute.
Yes, Aisha, thank you. So we've established the fact that, of course, Nifty, the weakness is going to pertain over here. And we're looking at 24,500 as the next mark on the downside for this index. Of course, the resistances are shifting lower, and we're looking at 24,850 as the next resistance level.
Okay, that's the take coming in on the Nifty. But let's just mark some of the key pressure points. And I'll get Akshay in as well to comment in on that. Because sectorally, telecom, yes, because, you've got Vodafone, which has really tanked today. It's down about almost 9.5%. But other than that, it's a heavyweight-led selling that one has seen. And banks clearly are the focal point here. Looking at Axis, HDFC Bank, ICICI Bank, Kotak, SBI, I can't spot any winners there. or for that matter, select pharma names too. A Sun Pharma around 3.5%. There's of course some of the metal names like a Tata Steel as well in there, and then NBFCs too. Bajaj Finance has slid about a 2.25%. There's a Geo Financials, there's Trent, Reliance Industries. So quite a few segments of the market are also under pressure. Akshay, other than banks, where is it that you see weakness in the market right now, sectorally or any specific stock cluster?
Yeah, so besides banks, if I were to kind of name some sectors where there might be some extended short-term profit booking, or I may say just for expiry-related profit booking, you can look at the metals pack. I think there is some weakness which we have seen in Tata Steel today. A range which was building the resistance of 160 has held pretty strong and resilient. And again, we are noting a fall from the resistance zone, which can again drag down the stock to levels of 155. Even if you look at some other metal names like Jindal Steel and Power, which was trying to attempt a strong breakout above 1020 level, that breakout has failed from a short-term perspective, and that means that on a failure of breakout, again, the lower end of supports around 930 or 940 might get revisited. Similar is the case with a JSW Steel from the metals pack, where a breakout of 1070 has failed, and mostly the failure of breakout means a downside till 1020. So metals seem to be more vulnerable to profit booking from a short-term price volume scenario. A couple of breakouts in the heavyweights have failed, and that means some pain might be in the offing for the short term in the metal space.
Okay, so that's the take on some of the metal counters, and that's something that Akshay is flagging off for us right now. Just want to pull up the Nifty once again. Yes, below the 24,700 mark is where we are at, around that mark right now. Varun, we were talking about the IT sector yesterday. That was the top gainer yesterday, and today, other than TCS, nothing else is actually looking good from the IT space. Do you think now is a time for a sectoral turnaround over here, given the underperformance we've already seen, or are you still waiting and watching when it comes to the IT space?
It's a time where IT space will turn around. One has to keep in mind that generic IT has gone through these phases in the past as well. Currently, the downturn which we saw is led by the fear of OpenAI, which has been more spoken about across. This was the same thing which happened during the Y2K time. Then we saw the same thing happening during the cloud time. When cloud had come, people were talking all the world of things that these companies are coming to an end, etc. And again, in OpenAI, in the world of OpenAI, we are again hearing the same noise. See, I can understand that at times they are a little behind the curve in terms of catching on to any newer stuff which is coming up. But every time historically they have proven that they gain that particular competency and they move ahead of everyone else. I don't see a reason why we will be behind. Every company in all their quarterly calls have been talking about the kind of spends, the kind of focus, the kind of build up they're seeing on the OpenAI side, on the AI side. And I don't see a reason why that's going to change. I hear a lot of things positive from the IT companies. This being a big opportunity, they are already seeing deal wins on the front of AI related deals, etc., which are coming in. So this is the best time when you're getting, say, Infosys, TCS, Wipro, etc., at below their 10-year average multiple. In fact, way below their 10-year average multiple, right? Let's not talk about the 5-year average multiple. These stocks will look so cheap that everyone will start buying right away. But I think that they're extremely attractive at the valuation they are. They're great businesses. They throw immense cash flow. I mean, you can't get anything better at 17, 18, 19 times. So it's a must buy.
Okay, and that's quite the tactical call right now, which I must admit the street seems to be still very much divided on, but Varun is convinced. Varun, great to have you on the show. Shivangi, Akshay, we let you guys go as well. On that note,